Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Well, hello. Nice to see you. This is the COB. I'm Nadine Blaney.
And I'm Juliette Sarli on a very big day, testing correction territory here.
I was going to swear, but let's just say
let's not.
Things got real, didn't they, today when it comes to the Trump tariff scenario. We won't go too far into the politics of it. Of course, what we will be talking about is what it has meant for market moves. So just to start us off, I thought sometimes a picture says 1,000 words. And there's a snapshot of the Aussie market. We call this a heat map in markets. And you can see there's a lot of heat going on here in terms of that very deep red. Look at Wesfarmers. Look at Woolworths. Look at Goodman Group, BHP, and the big banks, Jules.
Yeah, and I think you mentioned Woolworths actually touched a 6-year low. So a lot of, technical indicators being broken, if that's the right terminology, or at least in terms of some of these resistance levels being broken through. Let's get to the themes of the day, and of course that's where the CBO 200 has finished, or is finishing, down by 1.7%, but certainly it does look like we are now in correction territory, down 10% on the ASX 200 from those highs that we saw on Valentine's Day, which was pretty much a month ago.
All right, and we did have a technical talk on the call today. Look, it's Michael Gable from Fairmont Equity said that, things are breaking down, so it hasn't ended yet. We will hopefully, with our guest here in a few moments, Mark Gardner from MPC Markets, talk about maybe some of those companies that you want to have on your watch list. I know in this episode of the call today, there were many companies, you just keep it on the watch list. You want to wait for the price action to change, but really continuing to come under pressure, and that includes the Aussie.
The Aussie dollar, indeed. We'd been watching those technicals, and only a week ago, this is how quickly things change. I remember having a conversation with Nick Twidell from ATFX saying, look, potentially it's more likely that the Aussie will get back to those 65 levels than 60, which is what we were seeing in January. Then it pushed through 63 again overnight. So very hard to sort of call where these currency moves are going. There was also a lot of movement in the loonie because the Bank of Canada expected to cut tonight.
Yes, it is expected to cut. There is an economic slowdown going on there. We have a new Prime Minister, Mark Carney, used to lead the Bank of Canada and the Bank of England, incidentally, as well. But, you can't look completely through the Trump effect here locally because, of course, we are going to be subject to tariffs as well. The Australian government taking the position that they will not reciprocate, as Canada and Mexico have said that they will. Canada and Mexico have said that they will do. So 25% U.S. tariffs on steel and aluminium, which will impact Aussie companies as well.
Absolutely. All right, let's have a look at some of the sectoral moves in focus today. Kicking it off really there with what we saw with the banks. So of course that movement in CBA yesterday kind of helped limit some of the earlier losses, but today oversold again. David Sokolsky from Courier Capital telling me today there's very much not one market commentator out there that hasn't said for a long time this bank is overvalued, and certainly we are starting to see quite a bit of pressure coming through from the banks. The real estate sector also got hit quite hard today, and I think tech stocks were at something like a 7-month low.
Yeah, so the top 20 stocks at multi-month lows. You'll see it expressed here, I suppose, as well in consumer discretionary names with Wesfarmers. I mentioned that was taking a big hit. JB Hi-Fi as well. Just really soured sentiment across most of the sectors, if not all. I will, though, mention that we've seen iron ore ticking up as we've got the focus really shifting to near-term demand, and that is why you saw a little bit of green on the screen there with the likes of Fortescue.
Yeah, and those gold players too. All right, let's have a look at some of the other stocks in focus. Of course, Bluescope Steel is one in particular. When it comes to the overall tariffs, Jeffrey's saying protectionism in the US steel industry should provide a tailwind for the prices of hot-rolled coal. Bluescope, though, down by 0.7%.
Yeah, and that's considering it's got those North American operations. We are also watching ResMed. Australian shares falling after the company insider, Koshnik Bobby Goschel, has sold company stock worth $2.33 million. Investors don't like to see that. And IAG updating on ex-tropical Cyclone Alfred.
Yeah, receiving more than 4,000 insurance claims. Interesting, though, I had a really good conversation about the insurers with David Lane from Ordminet yesterday. IAG, Suncorp, his pick in the sector. IAG could weather the storm, pardon the pun, better than Suncorp because it's had about half of the 8,000 claims that Suncorp has mentioned. And Ordminet has a hold on QBE, not because says they don't like the stock, but because it's run so hard in the last 6 months or so.
You can find that interview up online. You can just search David Lane, and all of the content, the great content that he shares with us is up there. Orica, a buyback after better than expected first half earnings, and we still have that ongoing a stoush about Rio Tinto simplifying its structure, but also tapping the bond market to fund its acquisition of Arcadium Lithium.
All right, let's get to our guest, Mark Gardner, our Wednesday guest. Good afternoon from MPC Markets. All right, where do we hide on days like this?
I think there's a lot of value in those defensive sectors, really. And normally, what you'll see when there's an index sell-off is it's everything gets sold. But what you'll start to find is that things like the materials sector, for instance, well, quite a bit of the energy sector and consumer staples particularly, they're already there. They didn't rally last year. So where the pain's going to be is in those, anything with a triple-digit PE, anything that's super high growth, or where basically, not very surprised at all with the banks coming back. And not very surprised with the likes of JB Hi-Fi and Wesfarmers coming back. But if we go back to earnings, the CEOs all told us that the companies were not going to meet the PEs that those stocks are trading at. So realistically, it's not remotely surprising. If the guy running the company says you're going to get 3% growth and you're on a 40 PE, well, you probably should have sold. So. And I think it's just a normalisation, really, and we're starting to see with the banks obviously getting sold off today, as we've talked about in the past, is that that index ETF momentum to the upside that helped the likes of the banks and CBA, etc. That's a double-edged sword. And the value players are really, I think, still probably 15% away from starting to put their bids in. So. But I think the likes of CSL would be very cheap. Healthcare is always a sector where you want to be in. You want to go focus on stocks that are needs, not wants, necessarily.
So ResMed, today that's selling perhaps accentuated by the insider trading, or not insider trading, insider selling. Is it time to buy? It's hitting levels not seen since October of 2024.
Absolutely, and they had an outstanding earnings report as well, and they report quarterly. So the likes of CSL, the likes of ResMed, I think, are very good value. You've seen on most nights where even the night where we were down 4%, well, 2 nights ago, the healthcare sector, large portions of that were green on that heat map for the US. So it's really been concentrated in the Mag 7. And I think, the likes of, say, Elders, we've had record beef exports. We're going to get favourable conditions for a much more extended period. They're all trading on very low PEs as it stands at the moment. And I think they're looking at probably second or best crops. So, GrainCorp also on single-digit PEs. So there's value around there. Aussie Broadband, I think we brought up at the investment committee as well, which is a little bit growth orientated, but also defensive in that communication sector. So.
Yeah, it reminds me of an interview I did with Paul Tyler, who's the CEO of Superloop, just putting it all together. He actually said he wants the company to grow into its valuation. Because it has grown exponentially. Just ABB reminded me of that. So when you're thinking about then, where else? If you look at the commodities spectrum, gold and silver continue, to be bought. And
surprisingly, to be honest, I've been a long-term copper bull, and it's been frustrating to say the least. But they are looking very positive at the moment. And we've got long-term resistance here. That's all-time highs for copper, around, peaking above that $5 mark. Got hit, I think, about a week or so ago with the dreaded recession word being mentioned, but it's irregular for copper to rally when that word's mentioned. So price action-wise, from a technical standpoint, it's that's proving very big test here at $5.10, $5.20, and then silver as well is. Usually when recession's mentioned, it will tend to pull back as well, but it's been very resilient to the upside. So, and I think the US dollar, that chart there goes back to, we're talking 12-year highs there for silver, but you can see back around about 2010, when silver gets on a run, it gets on a really, really big run. So a breakout here could be really positive as well, and it does tend to play catch up to gold. So. There's opportunities out there still, and I think just realistically, look at your market darlings that have made probably way more money than they would in any normal year over the last year, and those sorts of runs don't last forever. Take some profits. You've got to reassess, review your portfolio. It happens every couple of years.
Yeah.
And we've had one of the best 2-year runs in the last 30 years. So the mistake you don't want to make is not setting a plan now, thinking it's going to be okay, and then panicking towards lows. So because there is still some decent profits there, and there's no shame in being in a little bit of cash. Warren Buffett's in 350 billion in cash, holds more.
Must be nice.
More treasury T-bills than the Treasury does, apparently. So, and just be patient for a period of time, because this will pass at some stage. But it reminds me a little bit of 2022, where we had a rough start to the year. It bottomed in June, and then we ended up a couple of percent for the year. But there were some pretty freak out moments there over the course of the year. But if you plan ahead, you'll make better decisions along the way, and you don't have to be fully allocated all the time. Our clients have got anywhere 20 to 50% cash basically at this point, and I'm getting less phone calls basically. But and they want to buy back in. They want to, they're very eager to get back in. But I think you can take your time over the next couple of months. Because if you buy wisely, you set yourself up for the next 2 or 3 years. So the likes of Goodman, for instance, like that's 25% pullback in one of the better companies, well-received $4 billion cap raise. I mean, but you can probably just dollar average over the course of the next couple of months, and then just sit back, kick back for the next 2 years, I'd say.
That'd be nice. You wrote a really good piece actually yesterday on some of your views too for us for the View on investment strategies, so that's worth looking if everybody goes back into their newsletter, and you mentioned hedging and the like as well. What could flip things around though in terms of sentiment? We've got the CPI tonight in the US.
I think the problem with Trump is, and I'm reluctant, I'm so tired of talking about Trump, is that CPI could come out, set a market trend, and he could say something which turns it back around again. Last night we're actually on a good run. We're up about 1.5% in the Nasdaq, and he held a press conference, and then back down we went. So market's not liking that uncertainty. CPI tonight, we're expecting 0.3, 2.9, anything on the high side, with the fact that there's been the recession word mentioned, and any form of inflation is probably not going to be good for the market because we're already on edge as it stands. So we probably want something lower than expected there. Otherwise, we could be in for a poor night as well again tonight. So but it's very hard to make long-term decisions when policy just keeps changing on a whim. So it's not a bad time to be on the sidelines at the moment, which is not normally what comes out of a stockbroker's mouth. But I think it really does pay to be patient at the moment, and go back into those great companies, those great growth companies that you've had to roll the dice and take a risk buying them at really expensive prices. Well, you should be embracing the fact that you can get them cheap, and make a shop. We call it a shopping list or a watch list, but make a shopping list. Set your 5 stocks you want to buy, look at the prices you want to buy them, and you'll likely get them on the day when everyone's panicking. But if you stick to your plan, it generally works out quite, pretty well in the long run.
So you want to look at the technicals as well? I mean, if you already have a belief in the fundamental story, you're starting to look for what in terms of when to pull the trigger, because we could, have these down nights, days, consecutively or scattergun. We really don't know. Look,
technicals work brilliant in momentum markets like we've had the last couple of years. I think you need to put some fundamentals into the equation, because it will be the technicals. Like sell-offs happen very fast, so the technicals won't turn until probably it's bounced back quite a bit. So I think you probably need to overlap a little bit of both as it stands at the moment. And just remember as well, as I said, going back to that 2022 example, we did have a small bounce and sideways, and before it went another leg. So you want to basically. What I've told clients is just dollar average over the course of the next few months, because trying to pick the bottom is very, very difficult. You may as well buy a Powerball ticket half the time. So if you dollar average, you're going to save yourself a lot of stress and just give yourself the best possible chance to get the best average price. It'll be this pullback will look on a 5-year chart will be a blip in 5 years, but at the time it feels very stressful and very panicky.
Not quite as stressful potentially as 5 years ago in the middle of the pandemic, but yes, of course, everything is hindsight in at the time.
It is
isn't
indeed.
it? All right, Mark, always a pleasure. Thank you.
Thanks, Mark.
Mark Gardner from NBC Markets. Now, you were on the call.
I was, and the stock of the day I picked because yesterday we saw that wild swing down in nickel industries. Today, it's actually the best performer on the 200. So I thought it would be interesting to get a technical update from Michael Gable from Fairmont Equities and Ashley Glover from CMC Markets.
I look at this and I don't see anything exciting. This was as of last night, so okay, the shares are up a few percent today. So, you know, for the brave, if we want to use that word, they're happy to try to trade bounces, but that's a bit of a punt. So we seem to be getting a short-term bounce, but I think if you know, if you're a little bit more sensible, you just stay away from the chart that looks like that.
I'd be keen to see how price action plays out now. Obviously, you said it did bounce a little bit this morning, but I think it's going to take a couple of days to play out on this one and see sort of where price action takes us next. You know, bearing in mind that MACDs and a lot of these technicals they're lagging indicators. So you're going to see the price action dictate where we go first before the MACD starts to show some strength there. But yeah, definitely wouldn't be, you know, buying this one just yet. I'd be a holder, waiting to see what price action does at support, and then, you know, maybe look for a speculative buy on the back of it. But as I said, speculative is the word on that one.
All right, so let's have a look at the leaders on a down day. We did talk about nickel industries there and rebounding after that sharp sell-off yesterday. Coronado Global Resources also looking good. Johns Lyng, very interesting because it had that huge slump on Monday as it was rebalanced out of the ASX 200, or will be in the next quarterly rebalancing. Deep Yellow also having a good session, and Polynova, of course, a lot going on there with those allegations.
Yeah, corporate governance and the CEO walking out yesterday. Now, IPH Limited is the worst performer, down by about 10%. We've learned that the CFO will leave at the end of June to pursue other opportunities. And so they're looking for a search there. Smart Group, Ramelius is down. Corporate travel, as well as we mentioned earlier, ResMed is one of the worst performers, down by close to 5% and is sitting now at $35.75 locally.
All right, in the small end of town, Trajan had a good session, up 17%, along with all these other companies on your screen, including Aura Energy and Berkeley Energia, which was up 8%.
Yeah, Hancock and Gore buying out one of their LITs. And here, Decider AI Industries. Well, tech was sold off significantly, wasn't it? I don't know if it's anything unique to that company, but yeah, keeping an eye on the tech space in general as we've watched the Mag 7 hit correction territory as well in the States.
All right, CPI out tonight, as we mentioned, expected to be up 2.9% on an annual basis. Also, the federal budget balance from the US and Bank of Canada.
Yeah, lots of focus in the US on that massive debt and the repayments that need to be made. But yeah, BOC expected to cut rates from 3 to 2.75%. I will say, though, not as many people are as on variable mortgages there. And they don't seem to obsess as much about these incremental interest rate cuts in Canada
I'm not
as
sure
we do
anybody
here.
other than Australians obsess as much, particularly about the property market. But anyway, let's move on. Tomorrow we'll obsess about the Melbourne Institute inflation expectations.
I don't know if I'll be.
And ex-dividend stocks include Bapcor, Ingham's and Yancoal.
Yeah, all right. So let's look at where we finished the market. Once all was done and dusted, we did see the S&P ASX 200 sort of mirroring what we saw on the CIBO Australia Index, down by about 1.7, I'll call it that. Well, sorry, 1.3%, a little bit of an improvement with those trades going through to end the session. Still though, 7,786. E-minis in the States looking mildly positive right now, NASDAQ and S&P 500. But again, it will be a headline-driven market. We're just getting breaking news now that the EU is looking to impose counter tariffs so, on over $28 billion worth of U.S. goods. So reciprocal tit-for-tat tariffs. It's responding to those U.S. steel and aluminium tariffs, saying that it will allow putting forward a package of new countermeasures on US exports. So it could be up to 26 billion euro, matching the economic scope of the US tariffs. Nobody seems to be looking to fly over.
No, indeed. All right. Well, that sets us up for another interesting global session, which means we'll have another interesting session tomorrow to play catch up to. We'll be live again from 9:45 a.m. Eastern. Enjoy your evening.